Well, is Tesla at this point just selling Elon Musk's grand claims in order to pump the stock? Quite a few people think so. We're going to get into that. But JP Morgan, as we can see here, big bank JP Morgan is having none of it. We can see that JP Morgan names Tesla as one of its top short ideas at the moment. The headline: JP Morgan just hit delete on Tesla and Rivian. So Rivian included in this. We're going to take a look at this short article, but the byline here says JP Morgan flags Tesla and Rivian as top shorts amid subsidy cuts and falling profitability. Tesla's 142 times price to earnings ratio. And if you're not familiar with investing, that's pretty high. And Rivian's cash burn look risky as EV hype collides with economic headwinds, says the analyst. And at the same time, or very directly related to it, Gordon Johnson, who's a well known Tesla bear, an analyst on Wall Street, who has been short the stock. I don't know if he's still short or he has been at times, but he says facts don't matter. What matters is baseless claims that catch media attention and push the stock higher, pumped by fanboys, Wall Street analysts. That's the business model for Tesla looking forward. And somebody else here, Matthew Battle, follows it up. I've been saying this for a few months now. Tesla needs to stop making things and just sell Musk claims. So that's a joke there, but not really. And this here, in terms of the Robotaxi, and I've done quite a few videos about the launch of the Robotaxi, or the so-called launch. So far, it looks more like a marketing exercise because they seem to have only about 12 on the road. They have a safety monitor in the car, not in the driver's seat, but access to the button to stop the ride and obvious tele monitoring as well. So it just seems to be a slow start as opposed to the Robotaxi fleet, the Tesla fleet waking up and being, Robotaxis, Elon's grand claims over time that you could go to sleep in LA and wake up in New York and not touch the wheel once. But way back in before 2020, he was making these claims, and here we are in mid 2025, and they're only just getting rolling, and they kind of had to show. Really, it's time to show up, and with this Robotaxi. In fact, Rogers says on X here, the DMV and the CPUC don't see any path for Tesla ever operating a Robotaxi in the state while under NHTSA investigation. Combined with the ongoing NHTSA investigation and growing safety concerns stemming from its operations in Austin, and that's where they've launched the Robotaxi, this very small amount of Robotaxis, there is no credible basis on which the DMV could deem Tesla's technology ready for public deployment on our streets. So really, baby steps there, far from waking up the fleet. And as I've said in other videos, Waymo expanding to new cities, and they've had a very good safety record over time, while Tesla is just starting out now. Well, Waymo's been going for years. And here we have a Tesla influencer, a stock pumper promoter, an Elon Jellicle, as I call him, Omar, says 1 month ago, there were no Tesla Robotaxis, but now there are. But the stock is down 4.2% in the last month. So he's really saying the stock should be up because the Robotaxis have launched, but the market is not having it. As we've seen, JP Morgan analysts not having it. Really, it's been a disappointment. And I think the market perhaps can see through that it's a marketing exercise. And there's $1 trillion valuation on this company. So they really need to show what is capable. And so so far the market really not buying it, it would seem. By the way, this is not financial advice. I'm not allowed to give financial advice at all. I'm not a financial advisor, so this is not investment advice whatsoever. But I am pointing to the various people and what they're saying. And we can see the Tesla stock price here. Now, the past year to date, it's down 17.3% just year to date. So not the huge bump that's been hoped for. But here we have some more promotion of Tesla. Elon has grand claims for Tesla and the Cybercab and the Robotaxi, which really haven't eventuated yet. They say here Cybercat will be the iPhone moment for cars. That's the promotional line. Use for personal use or add them to the Tesla Robotaxi network to earn income. You will be able to sleep, do work, and more while the vehicle drives you around. No steering wheel or pedals included, all for around $30,000. So there are a lot of claims in there, things that Elon has said. He thinks the Cybercap's going to be about $30,000. Mind you, he said the Cybertruck was going to be about $40,000. It came out at $100,000. It has been going down a little bit, but they're really not selling many of them. So perhaps this is why the market isn't buying these grand claims. How long will it take as part of it? The predictions of Elon have been way wrong when it comes to this. 1 million robotaxis on the road by 2020, 5 years later, and it's nothing like that. We've got 12. They did do one show of a Tesla being delivered autonomously to a customer. I mean, it was obviously a marketing show, very curated, very supervised, not in the car itself. But as far as I know, they've only delivered one like that. That wasn't just the start of them delivering cars like that. That's only one. And of course, they'd only be allowed to do that in Austin anyway. But, there was just one. And it was obviously highly, highly monitored and curated as a show, and they did a big celebration with engineers at the end of that as well. And so let's get to this article. The EV party may still be raging on Wall Street, but JP Morgan just showed up to shut it down in a bold call that's sure to spark debate, and feel free to debate in the comments. I mean, there are a lot of people who accuse me of being short Tesla, making these videos critical of Tesla because I'm short and I want the stock to go down. I am not short Tesla. I'm not long Tesla either. I have been long in the past, but never short. I don't go short on any stock. It's very hard to do, to time it. And I follow Warren Buffett's advice of not going short. And there's only really a handful of people who can do it successfully, I think. So I don't try. JP Morgan analyst Ryan Brinkman just named both Tesla and Rivian Automotive as top short ideas for the second half of 2025. So they're not thinking that robotaxis are suddenly going to wake up and earn the company billions and billions of dollars, which has been the claim from Elon Musk and from fans following it, analysts following it, who thinks it's going to be a roaring success. His rationale: sky-high valuations, shrinking subsidies, and a growing disconnect between expectations and reality. So Tesla's valuation is in overdrive, they say. Let's start with Tesla, the undisputed king of electric dreams. And are they just dreams? Some of the grand claims that Elon's making about robotaxis and robots as well, billions of robots. Is the market actually buying it at this point? Trading at 142 times forward earnings, Tesla's valuation towers over the rest of the so-called Magnificent Seven. So those companies, the so-called big techs, which have an average of just 25.2 forward earnings, which is a lot lower. And you'd expect a company to be growing really fast to have that kind of P ratio. But Tesla really isn't growing that fast, if at all, at the moment, because their actual vehicle sales have been going down. But Elon's promising robotaxis and robots, and the Elongelicals, the stock pumpers on X and on YouTube as well, have been saying there's massive growth coming. So that multiple might be easier to swallow if earnings were growing. The earnings should be growing for a ratio like that to be put on a stock. So something does have to happen. Are they getting a bit desperate with Elon's claims of what's going to happen? But the reality, as I said, everybody can see with robotaxis that it's just starting off slow, and it's actually more like Waymo, the way they started. And it took years for Waymo to scale to where it is now. But JP Morgan is forecasting a third straight year of EPS declines. Its earnings per share declines, thanks in part to thinner margins, reduced government subsidies, and a robotaxi moonshot that Brinkman said is unlikely to deliver, literally or figuratively, due to a lack of sensor redundancy. And in terms of the sensors, of course, Elon's not going with the LiDAR. He said it's a crutch. They don't need LiDAR like Waymo has, like other cars have. I did a video on Xiaomi with the car that they have there that's looking like a Tesla Slayer, or it could be, that's coming out. They uses LiDAR in its car. It's not the big visible ones that Waymo uses. It's more discreet, but Elon really still against it. But will it work without it, especially in those sun glare conditions, in inclement weather? It remains to be seen. And as I said, the market seems to be pretty skeptical now after at times being very bullish on Tesla. In other words, Tesla's autopilot isn't ready, and neither is its valuation. And it goes on. Rivian's burn rate hits a wall. Brinkman doesn't mince words here either. Slashed EV subsidies and rising tariffs could cripple Rivian's ability to trim its massive EBITDA losses and free cash flows. For a company still trying to scale, that's like hiking uphill with your battery pack unplugged. Of course, Tesla in a better position from the scaling point of view. It has scaled multiple countries, multiple factories. It's just not selling as much as it would like in terms of the actual cars itself. But the thought is, the marketing hype is that it doesn't need to sell as many cars as what the evangelicals say, because robotaxis and robots don't need to sell cars anymore. We can just scale with these other things, and it's going to make the company hundreds of billions, if not trillions, into the future. JP Morgan's call reflects a growing concern. The EV boom has hit an economic speed bump, with government support fading and competition intensifying. And of course, that is a problem for Tesla as well, for sure, not just for Rivian. That doesn't mean the long term EV story is dead, but it does suggest investors may be paying 2030 prices for 2025 problems. And of course, short sellers have said, including Jim Chanos, a famous short seller, has said that in bull markets, it's all about the future and the hopes and dreams. But when it comes to a bear market, which there isn't at the moment, then the reality sets in, and the premium goes away. So it remains to be seen if there will be a bear market. It looks like the AI. Do I call it a bubble? I have called it a bubble before. Who knows how long it's going to go on? As I've pointed out, I don't think there's been any major technological innovation in the world before in history, going back hundreds of years, that hasn't resulted in a market bubble. And then that involves trains, a train bubble twice, railroads, and of course the internet bubble, but lots of other things too. So you think that AI is going to go that way, and you never know. It's unpredictable how far it will go. So this all remains to be seen. There was an EV bubble, of course. Tesla still remains with that premium valuation for sure. And this other article related to that, linked to that article, no plan B. Tesla's Musk premium is on thin ice, with Elon Musk's political buzz growing, and he has started that political party after saying he'd pull back and concentrate on his companies, especially Tesla. He's still in politics. Tesla faces questions about leadership depth and succession planning. Tesla's valuation premium may shrink if Musk becomes less hands-on or more politically polarizing. And that's what happened, when he went into the Trump administration. At first, it was the premium, the Trump premium, and then they started fighting. Of course, the inevitable happened. So it remains to be seen what happens. So if you're getting value out of this episode so far, by the way, I'd really appreciate it if you remember to hit that like button to help the algorithm to spread it to more people. I have had a week off, so maybe the algorithm's forgotten about me a little bit. So I would appreciate that extra help in this video in particular to get it going again. Tesla is swimming in contradiction. It sure is. On the one hand, it's a $1 trillion behemoth rivaling the economy of an entire small nation. Well, I live in a small nation of 5 million people. It's nowhere near $1 trillion economy, I don't think. On the other hand, investors are jittery. Shares are down about 17% year to date. The culprit, Elon Musk's escalating political ambitions and a glaring lack of an alternative CEO. All right, so what do you think of all this? Let me know what you think. As I said, this is not financial advice. I'm not giving an opinion on the stock. Tesla's notorious when you think it might go down, it takes off because of these grand claims from Elon. He seems to come out with a new grand claim that people believe, but The reality is the Elon of now is not like the Elon of 10 years ago. A lot of things that he's predicted and claimed, the claims have got bigger and bigger, and they really haven't delivered. In the early days of Tesla, the first cars that came out were successful and very popular. The Model Y was very popular. They haven't changed up the range. That they've come out with updates, but there are no new models, and there's intensifying competition in terms of price and quality all over the world. So what is going to happen? There's robotaxis and robots going to make the company lots of money in the very near future. Will the stock continue to have that Elon premium or not? What do you think? Let me know in the comments. And thanks for watching this one. I'm going to put a related video right there. Do go and see that now if you want to. And a subscribe link on screen as always. Do subscribe if you're not yet to get more of these kinds of videos from me in the future if you want to. And thanks for watching this one. And I'll see you in the next one.